Welcome to our journey into the world of Forex, where today we discuss the best days of the week to trade. As we explore the rhythms of the Forex market, you'll notice that the trading week isn't just a monotonous stretch of time. Instead, it ebbs and flows with its own unique tempo, offering different opportunities and challenges each day. The beginning of the week often comes with a sense of anticipation. Traders, fresh from the weekend, are formulating their strategies, taking into account the latest market sentiment and geopolitical events. However, this early week trading period, primarily Monday, is typically marked by lower volatility. The market is warming up, like a runner stretching before a race. As this runner gets into stride, we reach the midweek period. This is when the Forex market truly comes alive. Tuesday, Wednesday, and Thursday are often the most active trading days. The reason? The market is flooded with economic data releases and significant financial news. This influx of information can create increased momentum and volatility. It's like the heart of the race, where the pace quickens and the competition heats up. But it's not just about the thrill of the race. This midweek period is crucial for traders because of the higher liquidity it offers. With more people trading, it's easier to enter and exit positions. This can be especially beneficial for high-volume traders. As we approach the end of the week, the market begins to wind down. Friday often sees a slower pace, with less market activity. It's like our runner approaching the finish line, the intensity of the race easing as the end draws near. In the Forex market, every day brings its own unique rhythm and opportunities. The key is to understand these patterns and plan your strategies accordingly. By recognizing the ebb and flow of the market, you can position yourself to make the most out of each trading day. As we delve deeper, you will understand how each day of the week presents unique opportunities and challenges for Forex traders. Mondays are not just the start to your work week, but also the start to the Forex trading week. As we roll into the new week, it's important to understand that the Forex market tends to be a little more reserved. Picture the market as a giant waking up from its weekend slumber, stretching its muscles and preparing for the busy week ahead. This is a time when traders are sipping on their morning coffee, analyzing the latest market sentiment and geopolitical events that have unfolded over the weekend. The beginning of the week, therefore, typically sees lower volatility. The traders are not just jumping into the market, but they're cautiously dipping their toes in, testing the waters, and forming their strategies for the week. It's a game of chess, not checkers. Each move is calculated, each decision weighed against the potential risks and rewards. You see, the Forex market is influenced by a myriad of factors, from political unrest to economic indicators, and traders need to assimilate this information, form an understanding, and then strategize. This process takes time, and hence, the market activity is often slower on Mondays. Now, this does not mean that trading on Mondays is unprofitable, quite the contrary. The cautious approach, often adopted at the start of the week, can be an opportunity for those who prefer a more measured pace. It's a great time to take a step back, observe, and plan out your trades for the week. Think of it this way. You're a surfer waiting for the perfect wave. Mondays are when you're observing the sea, understanding the patterns, and preparing to ride the wave. It's about patience, strategy, and understanding the rhythm of the market. So, as you start your trading week, remember to approach the market with a clear mindset. Take the time to understand the market sentiment, form your strategies, and prepare for the days ahead. As we move into the middle of the week, you'll see how the market dynamics change. Welcome to the heart of the trading week, where things really start to heat up. The middle of the week is often where the action is. It's when the Forex market is in full swing, bustling with activity. This is largely due to the increased momentum and volatility that are commonplace during this period. But what drives this midweek dynamism, you may ask? The answer lies in the more frequent release of economic data and significant financial news. As the week progresses, more and more information becomes available that can affect the Forex market. This information can range from GDP reports to employment statistics, from central bank announcements to geopolitical events. Each of these has the potential to cause shifts in currency values, thereby creating opportunities for the vigilant trader. Let's delve a bit deeper into this. Economic data releases are important because they provide a snapshot of a country's economic health. Forex traders pay close attention to these releases as they can indicate changes in economic growth, inflation, and central bank policies, all of which can influence currency prices. For instance, A higher than expected GDP report can strengthen a country's currency as it indicates a healthy economy. Conversely, lower than expected employment statistics can weaken a currency as it points to potential economic issues. Being aware of when these reports are due to be released and understanding their potential impact can give traders an edge. Financial news also plays a significant role in the midweek dynamics. Major happenings in the financial world can cause sudden shifts in the Forex market. For instance, a change in interest rates by a major central bank can lead to significant currency movements. Similarly, geopolitical events like elections, referendums, or conflicts can create uncertainty in the market, leading to increased volatility. But it's not just about being aware of these events. Successful trading involves interpreting the news, understanding how it can affect currency pairs, and making informed trading decisions based on this knowledge. It's about being proactive rather than reactive. Midweek, therefore, presents a double-edged sword. On one hand, the increased volatility can lead to greater profit potential. On the other hand, it can also lead to increased risk. The key to navigating these waters lies in a solid understanding of the market, thorough preparation, and a well-planned trading strategy. Remember this, midweek is not the time to sit back and relax. It's a time to be on your toes, to stay updated with the latest economic data releases and financial news, and to make calculated trading decisions. Done right, it can be the most rewarding period of the trading week. The importance of these midweek dynamics cannot be overstated in the world of Forex trading. Now that we've covered the dynamics of midweek trading, let's delve into why Tuesday to Thursday are often the most active trading days in Forex. To understand this, let's take a closer look at the Forex market's heartbeat, the economic calendar. It's like the market's pulse, with scheduled announcements of economic statistics, central bank meetings, and political events. The middle of the week, particularly from Tuesday to Thursday, is typically when the heart of the Forex market beats the loudest. It's when the most significant economic data, such as employment figures, interest rate decisions, and GDP reports, are often released. These data points can cause dramatic swings in currency prices, creating potential opportunities for traders. It's like a roller coaster ride, where the thrill of the ride is in the sharp turns and sudden drops. Similarly, the excitement in Forex trading is in these sudden market movements, where traders can potentially profit from the volatility. But why is midweek so important? It's not just about the economic announcements, it's also about the players involved. The Forex market is like a bustling city, with different participants active at different times. The institutional traders, the big banks and hedge funds, tend to be most active during the middle of the week. Their large transactions can move the market, creating waves that individual traders can potentially ride. Now imagine being a surfer. You wouldn't want to ride the waves when the sea is calm, would you? The same concept applies to Forex trading. Midweek is when the waves are typically the highest, offering the best opportunities for traders. But remember, with greater opportunities also come greater risks. Just as a surfer must understand the sea's currents and tides, a Forex trader must understand the market's dynamics. Knowledge of when major economic announcements are scheduled and when institutional traders are most active can help traders navigate the market's waves more effectively and potentially increase their chances of success. So, what does this mean for your trading strategy? Well, it's like planning a journey. You wouldn't embark on a long road trip without first checking the weather forecast, would you? The same applies to Forex trading. Understanding the weekly patterns in the Forex market can help you plan your trading journey more effectively. You can potentially take advantage of the increased volatility midweek, while also preparing for the quieter periods at the start and end of the week. In conclusion, the importance of midweek in Forex trading cannot be overstated. It's a time of heightened activity with major economic announcements and increased institutional trading. Understanding these weekly patterns is key in formulating your trading strategy. It's like having a map for your trading journey, guiding you through the market's twists and turns. And remember, the journey is just as important as the destination. So enjoy the ride, learn from the experience, and keep refining your strategy. After all, the goal is not just to reach your destination, but also to enjoy the journey along the way. Understanding these weekly patterns is key in formulating your trading strategy. Now that we understand the rhythm of the week, let's talk about how to plan your trading strategy around daily volatility. The Forex market, like any other financial market, is a living, breathing entity. Its pulse quickens and slows, It has its peaks and troughs. As traders, our job is to synchronize ourselves with its rhythm and make the most of the opportunities it presents. So, how do we do that? Let's break it down day by day. Mondays. The market is just waking up from the weekend, stretching its limbs and assessing the landscape. This is your time for analysis and planning. Look at the latest market sentiment, geopolitical events, and economic indicators. Draw up a game plan. But remember, tread lightly. The market is still finding its feet and volatility is typically lower. Then comes the midweek. Tuesday to Thursday, the market is in full swing. The pulse quickens, the action intensifies. This is when you want to be in the thick of things. These days often see higher liquidity and more significant market movements, driven by economic data releases and financial news. It's your time to trade actively, but wisely. Always remember, the market is a dance, not a battle. You're not there to conquer, but to move with the rhythm. And then, the week winds down on Friday. The market starts to slow its pace, catch its breath. This is when you should also slow down. Be cautious. Take a step back. Reflect on your trades, assess your wins and losses, and plan for the next week. The market might throw a few curveballs your way with end-of-week adjustments, so it's best to tread carefully. But what about the weekends, you ask? Well, the Forex market takes a breather during the weekend. This is your time to rest too. Recharge your batteries, spend time with your loved ones, and get ready for the next week. Remember, a well-rested mind is a sharp mind. In essence, your trading strategy should ebb and flow with the market's rhythm. Each day presents its unique challenges and opportunities. It's not about predicting every single market movement. It's about being responsive, adaptable, and staying in sync with the market's pulse. It's about understanding the daily variations and leveraging them to your advantage. So there you have it. A snapshot of how you can plan your trading strategy around daily volatility. Remember, the key is to stay flexible. Don't get fixated on a single strategy or approach. The market is always changing, and so should your strategies. By understanding these daily variations in the Forex market, you can optimize your trading strategies for success. We've covered a lot of ground today, discussing the best days of the week to trade Forex. We've explored how the Forex market ebbs and flows throughout the week, with each day offering its own unique opportunities and challenges. We started off with an overview of the trading days, drilling down into the fact that midweek is usually the most active period in the Forex market. We highlighted how this is due to higher liquidity and market movements compared to the start and end of the week. Then, we dove into the dynamics of early week trading. We talked about how the beginning of the week generally sees lower volatility as traders formulate their strategies based on the latest market sentiments and geopolitical events. Next, we examined the midweek dynamics. We underscored how increased momentum and volatility are common midweek, driven by more frequent economic data releases and significant financial news. We also emphasized the importance of midweek trading. We explained that Tuesday to Thursday are often the most active trading days in Forex, with major economic announcements and heightened institutional trading activity taking place. Finally, we discussed planning around daily volatility. We emphasized how strategies can be adapted for each day, with a focus on analysis and planning on Mondays, active trading midweek, and cautious approaches on Fridays as the market activity slows down. By understanding these patterns and planning your trading strategies around them, you can optimize your trading activity and potentially achieve better results. However, remember that these are just general trends and they may not apply to every week or every market condition. The key is to stay informed, keep analyzing, and adapt your strategies as needed. Now, I invite you to complete the final lesson of this chapter and take the quiz on understanding Forex market hours. And don't forget to start Chapter 4, Participants in the Forex Market. Your journey into the world of Forex is just beginning.